Hey everybody, welcome to this week's Ag Commodity Corner Plus podcast. It's week 42 and today is Jan the 23rd, 2026. Mo, another big week in the markets. What's our title for this week's podcast?
Yeah, this week higher geopolitics is causing some anxiety, and it's called the Sell America trade. Plus, Argentina remains dry. Let's get into it. Here's our weekly summary quote chart. A lot of highlighted yellow. If you've been watching since the beginning of the year, the first week there was a lot of green on the screen. Then we took a pause last week, and you guys know why we took a pause. Darn USDA wasn't the corn farmer's friend. But we have since recovered from those lows, and corn being up 8 cents for the week. That's a win, guys. Beans up another 15. By the way, the beans are closing above that low from that bearish USDA crop report on January 12th. Meal was up 10.70, probably because Argentina is too dry. Number one meal exporter in the world. Soy oil up 102. U.S. government talking about biofuel quotas by early March, so that set oil futures higher, which helps support soybean futures. Canola up another 12.30 after we talked about that China Canada trade deal last week. Chicago wheat, Kansas, Minneapolis, all higher. I think this winter storm, this winter kill fear is causing that rally. We'll see whether this finally takes wheat much higher. We got Bitcoin not acting like a safe haven this week like gold and silver after those higher geopolitics. Crude higher because of geopolitics. Again, not so much about Greenland, but more about Iran. Trump is sending some ships closer to Iran. Market doesn't like that. Natural gas up 87% just this week. Wow. We, by the way, were forecasting that. We said that there'd be another spike because of some cold weather, and we got it. But I don't think this thing is going to last. It'll be short-lived. Gold, almost 5,000. Silver, 100. Some now talking 125. Central banks hoarding gold and silver like it's going out of style. U.S. dollar down 181 because of those geopolitics. If it breaks 96, you're in trouble. You're going to 88. That Canadian dollar's heading higher, probably breaking 74, 75, and the euro dollar was also down 2 cents for the week. So we didn't think there was much going on this week, but shoot, there was a lot. Let's start off with this map that was generated by Trump and AI.
Well, Mo, that's the place we should start with. So this week, Trump wanted to annex Greenland, supposedly, and he announced that ahead of his speech at Davos. And guess what that did? That sent the volatility index and all sorts of fears into the market. So the VIX spiked at 20 in terms of the anxiety that was in the markets, and that compares to the April highs from last year when the volatility index went to 60. And this is signaling a tactical negotiation tactic, sort of like the shock fear sort of tactic that he's been using since he came into office. But the same week, as in this week itself, Trump announced a framework deal with NATO on Greenland. And stock markets initially fell following the news of annexing Greenland, but then made up ground and went into new record highs. The news supported more demand for safe haven assets like gold and silver and platinum and all of that. And the anxiety in the markets are yet to be cooled.
Well, focus on this map. So Trump, on his social truth network, generated this. It has an American flag on the U.S., of course, Alaska, Canada, Greenland, Cuba. I'm surprised he didn't include Mexico and Colombia because they're next. This caused a lot of anxiety amongst investors, and of course, the VIX climbed, but it wasn't as bad as last April with the reciprocal tariffs. And then, of course, the markets came back after Trump announced that he had a framework deal with NATO. But the following day, both Denmark and Greenland said sovereignty is off the table. We're not for sale, and anything that happens with a deal needs to be signed off from us. And by the way, Trump wants those minerals. Some think that it's worth as much as $5 trillion.
Let's switch from that to South American weather. The 2026 Brazil Matto Grosso soybean harvest is at 7%, which is slow as wet weather returns. But this is for further southern parts of Brazil and some of those regions nearby. But as far as Argentina is concerned, that is still dry. Another sharp drop in Argentina's corn and soybean conditions this week amid their ongoing dryness and heat. Corn good to excellent is 12%, fair to bad is 6%, soybeans good to excellent 8%, fair to bad is 9%. Sorry, the good to excellent on both are in negative numbers, so minus 12 on the good to excellent, minus 8 on soybean.
Yeah, you can see here, this is Matto Grosso, so 7% harvested. That rain's coming in, slowing things down. And you can see the storm here, this wet weather here, okay? And then as you go further south, this part is Argentina, and that's the dry weather that everybody's talking about. And I think that the funds, this is another chart showing how dry Argentina is in those crop conditions coming down. And you can see that the soybean chart is created that double bottom. We talked about creating that double bottom last week. That it's in the process of doing that. We're almost completing that pattern. We're disappointed that this week we didn't close above that 1070 mark, that ceiling, but we still got lots of time. And so it also closed above the low, 1049 low from the USDA January crop report the day before. So all in all, I mean, this is good news. I'm going to call it a win. Let's call it a bull. Why not? We'll see what happens next week. What about this winter storm? I mean, Ash, you staying warm?
We're trying to. Wheat futures, we're coming back from the dead. We have not spoken about wheat in a long while. Does anyone remember wheat? Basically, wheat is climbing on fears that frost would do damage, winter kill, but there's a snow blanket on the fields, and wheat has 9 lives. But wheat futures also closed above the Jan 12, 2026 close, despite corn remaining as an anchor. March wheat futures are sharply higher today, and over the last 2 days, it's climbed by about 21 cents. The last 2 days. And that takes it to 5.29. The 200-day moving average comes in at 5.57. Do you think that's the next target, Mo?
Well, we're creating that triple bottom, but we've been down here before. You get the false starts and then you go back down. There's still too much supply globally. We'll see if this does any damage. Way too early. We won't know till probably April. So, as I said before, it's going to be a long winter.
Some more good news today. We had the delayed weekly USDA exports report, which showed another monster weekly U.S. exports, and wheat again was supported by the strong numbers. The 25-26 U.S. soybean pace is now at minus 22% year on year versus USDA's target, which was just minus 16.3%. And without Chinese buyers, and if the non-Chinese buyers buy 229 million more bushels before the end of the marketing year, the USDA 1.575 billion target would be too low.
So it's still early, but the trade now is thinking, unlike they were thinking a couple months ago, now that the USDA has lowered that target to 1.575 in the January crop report, that may be too low. Why? Because you're narrowing the gap. And the non-Chinese buyers need to only buy 229 million bushels to meet that target. So this is another friendly scenario or catalyst that could take beans back to $11. So another win as demand continues to remain strong. Don't forget about our program. Try it. We got our app. This week we were talking about livestock. For you guys out there, livestock is going to win again this year compared to crops. But we were talking about our outlook, our forecast. We've been spot on with the cattle markets, 5-year bull market. We've been spot on hogs because of the higher demand and the disease pressure both in Ontario and across the United States. So sign up for free and this week, and we'll send you those reports so you can get the insight as well.
Well, that winter storm that you spoke about and all those frigid temperatures, guess what it did to natural gas? As you guys can see on the natural gas price chart there, the futures chart towards the right, that immense spike in futures, and mostly owing to frigid conditions for large parts of North America and that demand for immediate heating requirements. So nearby natural gas futures have spiked by about 87% this week, on track for the biggest weekly rise since 1990 and at the highest since 2022.
In past podcasts, we're not surprised. We were forecasting this. We warned everybody you could get a second spike because it was just too early. Winter wasn't yet done, and of course we got it. But when you get these 90 degrees parabolic moves, they don't end well. So be careful, guys. If you're long, take your profits. If you're not, I guess you can go short, but also be careful there as well.
Sticking with the weather conditions and also the drought situation in the U.S., and this is a map largely of Texas. So Texas drought is getting worse. The latest U.S. Drought Monitor map showed that as far as the whole of the U.S. is concerned, about 69% of it is in D0 to D4 conditions, which are dry to drought conditions, versus 67.69 the prior week. And this compares to, if we were to compare it to the drought year of 2012, that year it was 56.94%. South and east are driest, with Midwest seeing large areas of dryness. Near-term snow or precipitation will help parts of the Corn Belt. But Mo, looking at that Texas map, is this a warning sign for something to come?
Yes, it is. We're getting too many warning signs. This past week, I don't know if you guys saw on social media, the 5 meters of snow that Russia got. We're getting extreme record cold temperatures, and now the drought in Texas. And it's part of my 89-year drought cycle that we've been talking about since 2019. And in the winter of 35, we were getting the same thing until the spring of 36, when Mother Nature turned off the tap water and provided major heat. There are some forecasters calling for record smoke and wildfires in Western Canada, which means hot, dry weather. So way too early to get excited, but and this drought tends to start in Texas, travel north and east. So we'll have to wait and see. But if you're looking for higher prices, outside of the USDA being your friend, this could be it. But remember, it takes a long time for the funds to react, so be patient.
Let's talk about U.S. biofuel policy. A kick the can down the road on E15 is disappointing. The U.S. did not include E15 in the latest funding for the U.S. government to remain open by the end of Jan, but instead they will try and include in a supplementary appropriations bill. Even the bridge payments on Feb 28th for rural American farmer is not enough, and the farmers seem to be suffering.
This is disappointing. Even with the bridge payments that were going to be paid out on February 28th, there's not a single farmer that can make money. Trump is to visit Iowa next Tuesday. I hope he has something for them. This is just rural America is suffering. It's unfortunate.
We also had the cattle on feed report fresh off the press today. Cattle on feed came in almost exactly as expected. The inventory is at 97% versus the prior year. Placements, though, came in slightly higher at 94.6 versus expected at 93. Marketings also as expected at 102% versus the prior year. No expansion. The tight supply situation continues, and I guess, like you said, Mo, another strong year for cattle futures.
Yeah, this was a neutral report. The heifers as a percentage of the feed lot compared to last year was unchanged at 38.7%. So again, no signs of any expansion. Bull market continues.
Finally, let's finish off the market discussion with the latest CFTC again released today. As you guys can see, corn, some buying in corn, taking that net short position to minus 81, 324. On the soybean side, more selling, reduced that net long position to 10,060. Whereas on the canola side, and this we should see more buying, I believe, as we get the next report. There was some serious buying, over 10,000 contracts bought, reducing that net short position from minus 81K to minus 71K.
In real time, I think the corn short position has been reduced because of, we closed up 8 cents this week. Soybeans, same thing. The funds have been buying here in the last week or so. And then the canola, remember that trade news with China came in probably after this report was printed. So I would think that the funds are closer to minus 30,000 short. So they have been covering those short positions. And then finally, I just want to leave this with you. Risk is always better than regret. We've talked to so many farmers in the past, and they say, Mo, I wish I would have bought that land that came up for sale next to me. I really regret that. So if you're prepared to do something, take the risk. There's never a good time. If you've got the capital and the opportunity comes up, take that risk. Until next week, thanks for watching. Have a great day, great weekend, and stay warm.
Bye, guys.